Thursday, August 14th, market analysis, Stan Ehrlich. I start out with stock indexes. I go to futures, and I've got a few stocks that I follow. Plus, there's a special announcement today. I will be making available. I have to build it first. Documentation. Now, it could be a video and or a spreadsheet and or maybe a Word doc detailing the history of the October lows, year by year, graphic by graphic, over probably between 30 and 35 years, back about when the S&P started to trade. SPY is what I use for my base symbol. You have to ask for it. You see my email address right here, info@ersignals.com. You send an email to that address asking for the special report. I'll send you the special report. So here we go. And that'll be on the October lows, which I definitely expect. They have been approximately 90+% of the time profitable and over the last 30 years. Sometimes hugely important turning points in the market for many months, if not years to come. But, those are rare. Usually they're ones that last for a month or two or three and big rallies, substantial. But you'll see. Today we did not make a higher high. First time in a bit. We closed fairly strong, although a little lower. And the low was slightly lower than yesterday's lows. Now, that's the first time we've seen that happen in over a week. Those are all little tiny signs that something could be brewing, but it's not what I would call definitive yet on the indexes overall. Yeah, it closed a little lower, but that was on a good, strong last hour or two or, closing time frame. And I just can't pin it down yet. If I had a bearish engulfing, I'd be a lot more optimistic about the break coming. So I think it's coming soon. And so how much? Well, the first important support level, and I don't think that will hold once the break starts. And I pretty much know it's going to be soon. 62.39.75. But I doubt that's going to hold. It might be a bounce. Yeah, easily off that level. But I'm more or less looking for something in the ballpark of 59.50 to 5,900. And that's going to be an extremely important support level. Remember, I've got almost 2 months before October. Well, this is the middle of August almost. So the rest of August and September, the market has typically topped out. And all you got to do is email me, info@ersignals.com, and I will send you the report. Next chart. We have a E-mini 5-minute data. Doesn't show really much weakness. We're still climbing. Also, basically the same thing on the spider as you would expect. No gaps to close. They were closed just fine, very accurately. I can't come up with any super bears to say, or I sure as heck would. On the 5-minute chart, same thing, basically flattened out a little. And we have an overbought condition that's a little different on the QQQ, and we went down a little bit today. But I can't come up with any reversals. We haven't even tested the first layer of support, which would be the old bearish engulfing, which worked spectacularly, but only for the next day. Nevertheless, it worked really great. So that would be the first, and it's not very far away, 574.50-ish. And then down to this marked 5,200, 5,200. Yeah. And then something much more profoundly in the QQQ, and that'll be the NASDAQ basically as well, different numbers, will be at 540. That's going to be an important support level. And I think very reachable. Next. Just the 5-minute chart, sorry. Now, if we start closing below the low of early this morning, or getting below that like tomorrow or the next week, well, that does start to look a little more interesting from a bearish standpoint. Very short-term minor breakout. We have a little bit lower close on the NASDAQ futures contract with no new high for the move. First time that's happened in a week and a half. And a lower close with a low lower than yesterday's low. That's also a combination that hasn't happened for a week and a half, 2 weeks. 5-minute chart doesn't show too much, but I don't want to, well, I do want to see it close below today's low, which will be lower than yesterday's low, which will be probably breaking or challenging the lows Tuesday, and that's already below Monday for the week. Next, we have YM, possible top formation. Timing looks about right. If it starts to go down, then I'll outline this possible head and shoulder top. But that looks quite iffy. I don't like the fact the neckline would be slanting very substantially downward. And I don't like that. Start on that low and then go across that low and then downward like that. That's pretty steep. But the shoulders are timing well. Price levels are about the same at the moment. I don't know. Looks pretty symmetrical, so we'll see what happens. Keep it in mind. Otherwise, I haven't got anything to say about a top. It could just blow right through this damn thing and keep on going up a bit. It's not overbought yet. Next, there you go. Closed on a very strong note on the YM. And the Russell is in a major resistance area, although it's still holding in that area, closed near the bottom of it. It's overbought. Could go a little bit lower and then bounce back up again. I mean, look at this, since last October with a big bullish green at the very bottom of the market, the low day exactly. We have a move up that was much, much bigger than I originally talked about, I'm sure, at the time it happened. But that was very big, very probably profound. Turns out to past tense, ancient history now been very profound. Now what? Looking for sell signals, haven't got any, have to be neutral to friendly. Next chart. Same thing for the 5-minute Russell, of course, nothing new. We have an attempt to make a new high for the move in bonds, which are perplexing me a little bit the last couple of days. Bearish engulfing doesn't work anymore. Yesterday, it came up to the exact same high as Tuesday, and today, Thursday, excuse me, it made a higher high for 4 previous days, maybe even 5, probably 5. Closed very poorly, down quite a bit, and almost had a bearish engulfing. This is already immediately the lowest close, second lowest close, and close to the lowest close for 2 weeks. The neckline really is broken, plain as day. Get above it again, couldn't stay there, drop below it again. Yesterday it looked better, started to talk about the head and shoulder bottom being good. That's too much. Under, over, no. That neckline is just totally dead. I probably should drag it back to here, which is the original hypothetical, not right, original hypothetical breakout. But after that, it just got too iffy. Next. Notes are holding on the support last 3 or 4 or 5 days, but will it hold? I don't like the higher high by a chunk. And then all of a sudden, everything dropped out of, the sky. And a lot lower close and close to the lowest close and close to breaking into a support zone. Looking probably for a little bit lower. Crude. Oversold, bouncing a little, nice bounce. Where is it going to go? I don't know. Maybe even back up to 68.5. Ballpark. Support's holding. Looking decent. Like it's trying to rally. Oversold again on natural gas. It could easily bounce a little bit. So far, we're seeing almost every few days new lows for the trend down. Remember, it's a head and shoulder top formation, which originally broke out back on June 25th. A little bit weary about a close above the neckline on June 27th, but that was corrected immediately the next day, and ever since it's been doing just great. Nothing unusual, nothing weird. I don't see much of any significant support level. I'm going to have to start looking back in October, November, December for support levels. And they're, stair-stepping its way down, not too big bearish moves. And normal, very normal, still bearish, but we're oversold, so bounce a little. Next, we've got the heating oil making a new low, downside breakout yesterday. The close wasn't that convincing, being that it was back up above the previous lows. And today we really didn't do anything. So basically bearish. Lower lows have been happening. Lower highs recently did get part of the topping out process. A bearish engulfing arrow signal, but it wasn't the highest high, which we always love and got on June 23rd. Okay, so new lows, still bearish. Looking for a test of major support, 2009. Next, bearish engulfing sell signal today in gold. This has to tell me if the signal is good, and obviously I trust him. We got a very good one last time over here. Not that that means the next one's going to be good. Don't rely on those stupid kind of statistics. July 23rd, it worked fine for about a week or so, dropped into support. Great. Didn't get one on the top here, but this bearish engulfing is within the allotted number of back days that I study. So if we still have a bearish engulfing, which we did today, and it was overbought within the last X number of days, then it's a good signal, which it has because it's red. Now, we were overbought 1, 2, 3, 4 days ago. So that's within the last X number of days. It's not 4. And I am now expecting it to hit the support level very easily and break below support. I am now flat out bearish on gold. I don't think support's going to hold. I think you're going to hit it, maybe bounce off of it a little bit. Remember, I can allow everything up to any tick above today's high. That is my fail-safe buy stop, which moves down very quickly. So even if it drops off another, I don't know, few bucks tomorrow, my stop is probably going to drop down for a lot less of a risk than a tick above the high of today. Next. Higher high, didn't hold, a lousy close, but almost, yes, it was actually. I think this was an outside down day. Today's lows, 87, yep, it was. But we weren't overbought recently, X number of back days, and therefore, I'm mildly bearish because of the bearish engulfing. It's just when you're overbought and you have this kind of condition that we turn red. And it's much more profound. So I'd be looking for a test of support, which is a little tiny bit lower, 37.50, and most likely down to 36.08, approximately. Next. High, up, close, new high close, not above previous highs though, close, for the last couple of weeks. Short-term trend is up. Platinum. What can I say? Resistance could stop it, and we could break down. I can't tell that now. This looks slightly slightly bullish because of, again, an outside trading range. Today's low was, and yesterday, yep, it was slightly below yesterday's low and above yesterday's high with a higher close. So I have to be slightly friendly here. Next. Well, copper just can't seem to get above this little resistance area that I've been having in this area before the market crashed. I had this resistance area on the chart. Well, it was support back then, but now resistance, and it's stopping the rally. So today's close around unchanged after dropping off to minor new lows doesn't make me bullish or bearish one way or the other. Basically, resistance has stopped the rally in oversold conditions and getting out of it very slightly. I think copper could have another mini crash, not as big as this last one on July 30th, but may have been the biggest one in history for copper. I wouldn't doubt it. I can't remember in 53 years, and copper have been trading longer than that. I've seen something like that in copper. Next, we've got a bearish engulfing brand new sell signal in soybeans. The last buy signal was only 3 days ago, and it worked great. Does that imply that this sell signal is going to work great? No, not really. But it is a legitimate outside down day bearish after being overbought yesterday and at around the highs today. So I'm looking for a move right back down to where the green bar was. I'm saying approximately 996 to 990, maybe really quickly. Next, got soybean oil, new low close to the trend down. Remember, we're still barely closing above the original neckline for a head and shoulder bottom, which is still in force. But we just have to turn back up again very soon because we have very little elbow room left to stay above the neckline. When you start closing below that, you're breaking the cardinal rule. Once you break out, which was classic, up gap, big volume, big up day, a little follow through the next day or two, then a sell signal. That worked very well for a few days. Then new highs on the move, bouncing against resistance. Now, this theoretically should bottom out and turn back up. I don't have much help from many of the other grains, but let's see. Well, we're still coming up a little bit, but we're overbought in soybean meal, allowing for a minor dip. But this is looking a lot better, so I think that the upside of 298 is quite plausible. We're already missing the bottom. Now, yeah, it was oversold, but that's it. I mean, that's the only thing that turned it. And what do we got here? Oh boy, a bullish engulfing the first day today, corn. This is the first time this has happened in a long time. Well, the last bullish one plain out didn't work. The one before that was great on March 28th. Produced a very nice move for about a 3-week period, looks like 4 weeks. Then we have no other bicycles until that fantastic one on the bottom. Yeah, there's a couple that didn't work very well. And that one works not very well also. So let's see if this one works good. I think there's a good chance of that. Most I can justify at the moment is closing the gap at 417. Next, we've got wheat. Sweet. Lower low for the trend. New low for a long, long number of years. Lower close, new low close. Close to overbought. A little bounce could happen at any time. We did have an outright bullish engulfing that did not work back on July 11th. So that was dead right away. Now it looks red, but it was actually a green bullish. But there's a bearish trade in that bar. That's why it's colored that way. But anyway, you can check the low, lower, high, higher, and the close is higher. So that's bullish. And it was oversold. And the RSI is green. Definitely bullish. Didn't work. This is another new low. What can I say? This market could just dribble and dribble and dribble down, bouncing a little bit all the way down, kind of like the last month and a half. Next. And lastly, Shell. This is the first stock. Sideways between a rock and a hard spot, waiting for a breakout. Next. Resistance at the top of the zone, almost the top of the zone. Overbought conditions could be stopping the market in Apple. Can't say that for sure. Looks like it's trying to. Closed a little lower. A higher high, if that was legit, with 512, yeah, by 12 cents on a $235 stock, not much. With a lower close, very slight, doesn't really look like any kind of major reversal to me at this point. Only the fact that it's got the same highs 2 days in a row, and we're overbought, and we're at the top of a resistance area, almost, not quite. Those things kind of look like something could be happening on the downside. I can't pin it down very well. Next. Coming back to the support line, I told you that was very plausible last couple of days. It did it a second time now. A little unusual to see it 2 or 3, but it held. Closed a little lower, no reversals. I'm more interested in whether this trend line, the top of the old pennant bear trend line, holds like it did today and on Tuesday and on Monday. There's 3 lows out of 4 days here on that line. So that's pretty important. So if it closes below that, well, down we go. And obviously, if it stays at or above, we should be going to new highs. Next, NVIDIA, Doji, basically unchanged, up a little. Trend line broken. First time in a while. Long while. But it did not close below the trend line. And the low is equal to the previous day and the day before that. A little bit of support held, not the line. But the closing price was above the line. I still think we're alive, but if we close below today's low, that changes the picture completely. And we're back to the E-mini. You have a great day and profitable trading to you. And email me if you want that special report on the October lows.